I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know. Consumer confidence slipped slightly in April, the first month of the second quarter, as consumers' assessment of the present situation eased, but expectations for the future improved slightly from March. This week's advanced GDP reading showed a slowdown relative to the strong fourth quarter, driven by decreases in inventories, exports, and government spending, and an increase in imports. Consumer spending and investment increased, suggesting that consumers and businesses remain healthy despite the contraction. Inflation ate into output, which grew in nominal terms. Also this week, mortgage rates steadied after 7 weeks of climbing. They are up roughly 2 percentage points compared to just 4 months ago. In roughly the same period, the Fed's outlook for short-term rates increased by around 1 percentage point. In other words, mortgage rates have already anticipated policy increases and may be able to steady until the outlook shifts again. The Fed is widely expected to raise short-term rates by 0.5% next week, and that decision is baked into today's rates already. However, any forward guidance, clues about the economic and policy outlook offered by the Fed next week, particularly in light of lower first quarter GDP measures, could spark a shift in mortgage rates. Case Shiller data for February prices underscored the urgency buyers felt early this year to buy homes and lock in costs before further mortgage rate increases. In Realtor.com weekly housing data, we saw that listing prices continued to advance at a double-digit pace. We also saw new listings increase, which helped drive a big improvement in active inventory declines. We expect that more sellers, combined with a slowing sales pace, will lead to year-over-year gains in inventory in the near future. This means more options for home shoppers who stick with their home search, and for homeowners hoping to sell this year, better conditions for listing sooner. 2 separate measures this week pointed to a slowing home sales pace. NAR's pending home sales, which primarily covers existing homes, and new home sales released by the census, each showed moderating purchase activity relative to last month and last year. Amid rising mortgage costs, the homeownership rate dipped in the first quarter. Despite the overall decline, younger buyers, who tend to have the lowest rates, actually saw improvement. Finally, in collaboration with the Wall Street Journal, we released our first anniversary edition of the Emerging Housing Markets Index. Affordability and access to the outdoors are still big themes, driving this quarter's #1 market, Rapid City, South Dakota, to the top. You can see George Ratu and I discuss the index with the Wall Street Journal in a recorded live Ask WSJ session, or check out the Reddit AMA we did with reporter Nicole Friedman. You'll find the details on the index and our housing data for download at Realtor.com/research, and follow us on Twitter for real-time updates.